Hi you guys, welcome back to the channel. My name is Brad. This is the Firefighters Financial Toolbox. You know, lately I've been asking you guys to give me comments and ideas for shows and questions, and I appreciate them. And I got another question the other day for my 3 tax form video. Now these are the 3 tax forms that you get when you have a taxable account, you guys, not a retirement account. Amico 1 says, my money market fund pays dividends that they showed up on my 1099 div, but I still got taxed at my regular 24% tax rate. Why is that? Well, that's a really good question, you guys. Yes, money market funds do pay dividends. However, there's 2 types of dividends. There's qualified dividends and there's ordinary dividends. Now, qualified dividends are usually companies' stock. So we buy that and it gets favorable tax treatment, right? For most of us, if you're making under $440,000, you're getting taxed at 15%, you guys. So that's way better than 24%. However, even though a money market fund technically pays it as a dividend, it's still an ordinary dividend, which means it's taxed at normal interest rates. So you're going to pay your ordinary income rate of 24% in his case, whether it's at an Ally savings account, if it's a CD, or if it's a money market fund. You're still going to get the same rate. Now, if we take a look at the 1099 div form, we can see that on it, it shows ordinary and it also shows qualified dividends, and they're in 2 different boxes, you guys. Now, if we look at the 1099 int form, we see that we do have a box for treasury bonds, tax-free bonds, and some other things. Now, if he had a tax-free or municipal money market fund, that would show up on the 1099 int form, int being interest, you guys. So because it was from a money market fund, it actually does show up on the 1099 div dividend form, but it is considered an ordinary dividend, and therefore it's taxed at ordinary income rates. And in this case, he got taxed at his 24%. So you guys, taxes are really important, and where you hold your accounts and how they're taxed can make a big difference when your portfolio gets larger. If you're only talking about $1,000, maybe you're only talking about $10 or $15 in interest. But if you have $100,000 and now you're talking about the difference between paying $2,400 in taxes or $1,500 in taxes, then it starts to be a little bit bigger deal. Anyway, you guys, hope you got something out of this. If you did, drop me a like. If you're not already subscribed to the channel, hit that subscribe button, ring the bell. You're going to get notified every time I make a video. I make videos on investing, retirement, taxes, and overall financial well-being. Thanks a lot for coming out. We'll see you again.